All right, thanks very much. Tim, we might hand over to you. Thanks very much.
Yeah, good morning, everyone, and thank you, Zita, and thank you to New South Wales Department of Primary Industries. It's probably the most progressive government department that we work with by a long shot. So congratulations across the department for your work that you do across New South Wales. I'm originally a New South Welshman, so I didn't really like seeing the New South Wales map coloured in maroon there a few minutes ago. So perhaps New South Wales DPI might have to change their colour scheme to make sure the map's not maroon in the future. So I'll just, my presentation here today is predominantly, I'm having trouble moving my screen forward.
Sometimes it goes to sleep for a second. Maybe just give it a... Can you move it?
How are we going?
There we go.
Now?
Yep,
Yeah,
that's
it went
good.
to sleep. So thank you. Yeah, so my talk today is predominantly around the drivers affecting the fodder industry, although there's lots and lots of trends that affect this across the whole feed space. So I'll make some reference to the other feed commodities. My specialty is in that hay and fodder space, which is what my company Feed Central specialises in. So to date, we're obviously seeing a lack of rainfall across the country, particularly across New South Wales and southern Queensland. The other thing affecting the market is what I call FOMO, or the FOMO El Nino, which we love our acronyms. So the fear of missing out El Nino, which is driven by some media that I'll talk about in a little bit. The other thing driving is the export of feed, and the export of hay is driving the market as well. The fuel price and the ongoing pressure and freight, the 2022 wet season carryover product, which is a large volume of inventory of low quality sitting in the system, and the backlog of livestock and the supply chain problems within processing livestock and so forth that we're experiencing at the moment, all leading to significant price volatility across the feed space, particularly in the hay space. So it's just another way of looking at the rainfall across the country. So we're seeing the southern half of the country from west to east having a drought, a strong drought impact. I suppose when I started preparing for this presentation and just reviewing these maps, I hadn't reviewed them for a month or so, and I was just surprised by how fast and how widespread the dry is now setting in. So we saw that so that's from 1st July to 30th September. You can go back 1st of January to 30th September. You get a similar map, but the red areas are certainly growing with each month. It was good to see some rain in the last week in October, particularly through Victoria. Obviously, the people in Gippsland who are fighting bushfires one day and floods the next day, our thoughts are out with those people. However, it was great to see some rain across some areas last week. So in relation to the drought so far, it is having an impact on grain yield, especially across New South Wales and southern Queensland, and southern New South Wales and Victoria is going to fare really well. However, the New South Wales, southern Queensland supply is going to be back on previous years. We're also seeing obviously reduced silage and on-farm hay yield, particularly across the dairy regions through New South Wales, southern Queensland, and through Gippsland. And so we're seeing an increased demand just simply because of silage and hay yield on dairy farms, and also obviously pasture growth being impacted by the dry. So we're seeing increased demand for all commodities. Example, hay, hulls, cottonseed, pellets. We're seeing crazy prices for products such as cottonseed, pellets being in short supply or shorter supply, and almond hulls being almost unobtainable. So we're seeing, and that's all having an impact at the farm level and ability to purchase product in at viable prices. Last week's rain event also did do some damage to hay crops, and some product was stacked outside. So just beware buying product off farm. If it was made before the rain, there may be some damage to top bales if it was stacked, or if it was left unstacked in the paddock, there could be some rain damage on the bales. There'll also be some damage to product that was in the windrow. Not significant, nothing like last year. And on the upside of that rain event, it will increase grain yields. Talking to our suppliers through the Mallee and southern New South Wales, it was a very significant rain in terms of grain yields for those regions that received it. And on the downside, it decreases the hay area. There was a lot of growers were planning on cutting drought type or near drought type hay, grain crops for hay, and those crops won't be cut now because of that rain, making those crops viable for grain harvest. So like everything, it has, especially at this time of year, a rain event like that does have its positives and minuses. Obviously more positives than minuses with majority of rain events. The thing I wanted to touch on was the what I call the FOMO El Nino, and the headlines that are in the mainstream media. I think this is having an impact. I think that there is a fear of missing out is driving the market a little bit, and I suppose we're just encouraging people to take a chill pill, be alert but not alarmed, and to take their time in purchasing it. You know, it's not toilet paper. There is a supply of hay and grain and product out there, but we are just recommending slow down, form the relationships, do your research, and move forward. So we don't need to be in this. We're nowhere near a panic situation, perhaps like we were at the end of 2019 or early 2020. We're a long way from that. So we just take our time and work through it. With research and diligence would be our recommendation when buying feed. The other impact on the market is that China has reopened its export licenses for Australian hay export facilities. They had restricted the licenses, or specifically the licenses to export hay to Australia as they expired. China was not renewing them. They have renewed them in recent weeks, and I think I was expecting that would take a little bit of time. I was expecting the Chinese government would come and re-inspect every plant, and it could take some months or even years to get all the licenses established again. But it appears as though even the expired licenses have been reinstated very quickly. Talking to some exporters in the last week, they have had a record sales month for September, and at record as in all-time record sales months for September, and the low Aussie dollar is driving sales across all markets, not just China. The Japanese market, China market, Korea, Taiwan market has been particularly strong for cottonseed, as well as hay and other commodities. So it helped by the low Aussie dollar and the opening up of the China market. The other impact on the market at the moment is the sustained rise in the freight costs and the ongoing pressure on freight in general. So the fuel price is one factor, and it's almost a little bit surprising when you look a little bit deeper. The low Aussie dollar is driving a higher fuel price, and that is particularly impacted on diesel. There's also a driver shortage and really significant wages being paid to drivers, which is having an impact on per kilometre rates. Also seeing just a competition for freight, particularly last year where the rail network was taken out by flooding, and a lot of that product was put on the road. The and bad roads. We're seeing a lot of transport companies putting up their prices for increased wear and tear on their vehicles, and as a contributing factor. What we're seeing as response to that is companies like Feed Central are increasingly aware of bale weights. The heavier the bale, the more tons on the truck, which decreases the per ton freight cost, and that's a significant factor. And we're seeing growers being increasingly aware of bale weights, and we encourage all buyers to look at the delivered prices. And, particularly when buying hay, the ex-farm price is one factor. The actual delivered price is another factor, and the delivered price is more often than not determined by the weight on the truck and the kilometres that you're travelling. Often the weight on the truck is more important than the distance being travelled. The other thing on a plus is that there is slow and progressive improvement on road train and B-double access into farms, both supply farm and end user farms, and that does have a significant impact. So, when talking to your MPs and when in a policy environment, just keep pushing for that improved road train and B-double access. It's slow, but it's progressive. We're seeing, significant changes over the long term, and it is helping with the movement of commodities. And we're seeing, because of the pressure on price on freight, we are seeing a rise in ex-farm prices. So particularly through regional New South Wales, where in the past that product might have been more viable to bring up from South Australia or Victoria, because of the increased freight costs, the actual ex-farm price is increasing. More people competing for a local product, particularly through regional New South Wales. And, we're seeing, prices, canola hay, chickpea hay, wheat, barley hay. We're seeing really, really strong prices through New South Wales for those commodities, probably record prices, and it's driven by freight and the other factors that we've been talking about. The floods of 2022 do still have a bearing in the market, which seems ironic when we're talking about drought and dry weather. There was extensive weather damage on the product in 2022 and even going back to 2021. There's volumes of that product still in the market. It's unknown exact volumes, of course, but I think it is a significant volume of low quality products still in the market. That's probably a good thing in that it will put a volume of product in the market, which just will underpin the market going forward. It just creates caution for buyers that exactly what you're buying, because there will be a whole heap of different qualities still available because of the low quality product from previous years. And it should be a relatively affordable roughage. And we strongly encourage working with your nutritionist to help find out where that product fits in your ration and on your farm, and ensuring that you're buying with a feed test. And we strongly encourage buying with a visual description as well, because particularly with that old season product, the feed test doesn't tell the whole story. But the combined feed test and a visual description certainly helps tell the story. We've sold large volumes of that product. When described properly and adequately, we're not getting the complaints. If something's happened in the product and you're hearing lots of stories of where product wasn't described properly, then obviously it can cause some problems when it comes to feeding out. The other thing affecting the market is the backlog of livestock in the system. I think a lot of people are feeding just simply because they're not happy with the livestock prices being offered at the moment. They have the feeling that the livestock price will rise, and there's just too many sheep and cattle trying to go through the system at the moment, and the abattoirs aren't keeping up. We won't get into the politics of me commenting on the abattoirs, other than by reading media, it appears as though a lot of those abattoirs are looking at increasing capacity over the next few months, and particularly in the new year. So we may see some ability for the abattoirs to be able to handle the volume of product coming through. Obviously, with a low Aussie dollar, there shouldn't be too many things. We should be able to sell the meat overseas. But at the moment, the backlog of livestock in the system does appear to be slowing down the flow of livestock into the abattoirs and into consumers, and that is impacting on the amount of feed that's required to keep those animals fed and in good condition at the farm level. So, in summary, I think the prices of all feed are volatile. We're seeing probably not always a trend in the feed. We're seeing different prices being offered in different parts of the state, in different parts of the country. Those prices that are offered don't always make a lot of sense, but there is product trading at all levels, particularly in the hay space. So it's hard just to pin down exactly what the market price is. The other thing driving the market is what I call the FOMO, the fear of missing out on the El Nino, and the media reports surrounding that. The strength of the export market is also affecting for hay, grain, and all feed commodities. The sustained rise in the freight costs and the ongoing pressure on freight, and the 2023 quality is looking to be very good or mostly good. There will be some damage from last week's rain, and there's large carryover of very low quality product from 2022. And the backlog of livestock in the system is having an impact on feed demand right now, all resulting in that significant price volatility across hay and the majority of feed commodities. And all product is selling quite fast at the moment. So recommendations for those, particularly those buying feed, is don't panic. We don't think it's necessary to be getting caught up in the fear of missing out. It's not toilet paper. We can slow down a little bit and take our time and make the right decision. There will be some summer production, especially lucerne, and focus on quality. There will be, as we said, there'll be some low quality product in the market, and there'll be some very good quality in the market. And so think about what works for you, work with your nutritionist to help make those purchasing decisions. We're recommending to rekindle relationships or to form those relationships with selected suppliers. We think that's very important. There's a lot of volatility in the market, but those long-term relationships with suppliers are working. You know, in our example, we've got buyers through the dairy regions of New South Wales and through the country, really, that we've been working with for a very, very long period of time, and they certainly get preference and advice and one-on-one service. And so just encourage everyone to think about those relationships, and whether it be direct with a farmer or with a trader, an agent, think through who your relationships are with and whether they're helping your business and how they can help with the business. Also, having a relationship with a supplier is not always going to be a win. You know, you'd be thinking that it has to be a win most of the time, and it's like all relationships, there'll be some ups and some downs. So if you're chasing price every single time, it's going to be difficult to have that long-term relationship. If you're in that relationship for the long term, knowing that over the long term you'll win as many deals, you'll gain out of as many deals, and you'll form a genuine and long-term relationship with a supplier. And talk to the suppliers and make sure they know what you want. So, you know, they're in the market batting for you because they know what you want. It's just an important part of that relationship. And review the third-party risks of your relationship. There's a lot of suppliers out there. Does your supplier have viable contracts? Does your supplier have proper inventory management so that when the going gets tough and you're calling on that product, will it be available? And so dealing with reputable suppliers, and in the trade, we call it the third party risk. And so think seriously about that third party risk, particularly as it looks as though we're going deeper into supply issues, predominantly around drought. And now, if you are a hay grower, if you have the capability to make hay, we strongly encourage it. The market is strong. It will sell. We always say at this time of year, it's 365 days until the next harvest. And so, you know, for making hay, think about shedding, think about your ability to hold that product, think about the long-term marketing of that product, because we've got, you know, there's 365 days until the next harvest from now. So if you can make hay, then we'd encourage that the hay production, and of course silage as well. Finally, a departing tip and a bit of a plug for our company. Research is free online and it only costs 20 cents on the phone. So through systems like Feed Central, you can get a delivered price. All lots are inspected by certified independent inspectors, and all lots are feed tested, and that information is available either online or over the phone. Just really strongly encouraging people just to slow down a little bit, do the research, make the right decision that suits your business. So I'm happy to have any questions from people that are listening, Zita.
Yeah, thanks very much, Tim. That was excellent. A lot to take in there, but it was a great summary. Ken, you've got a question.
Thanks, Tim. Great presentation. You mentioned the rain saved a lot of the grain crops, particularly in Victoria. Is that the case right through New South Wales as well? So we will be seeing less grain crop converted to hay?
I think roughly Forbes, Dubbo North, it was probably too late and there wasn't really significant rain. But certainly south of Dubbo, Forbes, where people were thinking about making hay, if they got rain, they'll most likely let it go through to grain. And and certainly through the Mallee, through Victoria, which is a very large hay supply region. Yeah, it was very timely rain for that grain crop.
Thank you. Any other questions for Tim? As we discussed before, Tim, maybe it's just for those on the call, just a consideration. It sounds like most of the fodder is being sourced from southern parts of the country, but if farmers considering, sourcing from Queensland, that there is kind of red fire ant restrictions in certain areas, that, just to look up the kind of regulations and rules about importing that from Queensland to New South Wales. That's just a thing to be mindful of. But yeah, anything else there?
Yeah, the fire ant thing from Queensland is predominantly restricted to southeast Queensland. There are information on the New South Wales DPI website about that. The growers in that area are highly aware of it. They're putting in concrete floors in their hay sheds, and they are leaving the product on the ground for minimal periods of time, and they're monitoring the fire ants very seriously. So it's certainly being managed this end, but it's something to be definitely aware of. The other one is, the weeds is an increasing issue as well, particularly the Pythium weed, which is predominantly a central Queensland issue. I don't believe that we're anywhere near the supply shortages of what we were in the last big drought. So there shouldn't be any need to be bringing product from central Queensland into New South Wales. Yeah,
great. Thanks for those insights. Well, that's fantastic. Really appreciate it, Tim. That was a great presentation. And look, that's kind of, if there's no other questions for Tim, I might just wrap up with a few final slides. If I could just get you to stop sharing your screen there, Tim. And I'll just quickly share mine. Share. If I can get it to work. Okay, great. Well, thank you to everyone for joining today and to our speakers. But just before we wrap up, I just thought I'd let you know about some of the upcoming events and services that we've got in New South Wales at the moment. So if you haven't heard, we've got Dairy Research Symposium coming up in a month's time. So if you haven't already grabbed your tickets, please get on to the Dairy Research Foundation website and do that. So that's on the 7th and 8th of November. And just to make mention that we've got a special event, that we've got a service provider breakfast for dairy industry service providers on the Wednesday morning, which is being run by my colleague Jess Bell. So look, that's a free breakfast. And at that breakfast in the Wednesday morning, there'll be a presentation by Nicole Reichelt from Melbourne University, who will be talking about some of the research that's been going on across the state about gaps in dairy service provision, and having a bit of discussion about some of the findings that's come up to try and improve the excellence in the dairy service provision for New South Wales. So jump online. If you've already registered for the symposium, you'll just have to go in and add that as a ticket on for the breakfast, but that's in the link there. Jess might be able to put it in the chat as well. And then also we've got the Dairy Business Support Services Program, which is open for a second time. So that's available until June next year. Please get in touch with Jane Bauer at Dairy New South Wales to find out more about that. But that's offering, one-to-one or group support services for around business planning and related activities. So that can be either face-to-face or virtual, and can offer up to 6 hours of direct support for farm businesses in New South Wales, and that's accessible to any dairy business in New South Wales. So that's funded by DPI and the Farm Business Resilience Program. So please find out more about that, or tell your dairy clients about this. And then finally, look, there's a lot of tools. I guess DPI Climate Branch highlighted a lot of the seasonal and climate tools available, which is fantastic. Also, from a dairy industry perspective, we've got the Dairy Australia website, which has got a lot of resources and fact sheets on feeding and farm systems on the webpage, and feed budgeting tools. So get online and have a look at those. Then there's also the Farm System Evaluator tool, which has recently become available or soon to be available if farmers are looking at investing in different systems. So that can help with some of that decision making. And finally, from a New South Wales DPI perspective, we've got the drought and supplementary feed calculator. So you can compare a lot of different rations on that calculator. It's got up to 71 feeds on that database where you can compare the nutritional values, and you can also input some of your own feed values into that as well to compare. So look, there's a lot of different tools and support available. That's just listing a few of them that we've got coming up, and that's might be most relevant at this time of the year. But again, like we mention every time, if you've got further information or any questions or queries that you want to reach out to our team, please do. We've got the podcast that Sheena puts together every month that'll be coming out, which I think will have a bit of Tim's presentation in there as well, which will be great. But yeah, keep up to date with what's coming up on our Facebook page and also in our DPI newsletter as well. But I think that brings us to the end of the session today. And again, thanks very much to the speakers. Really valuable information, particularly at this time of the year. It's been fantastic to have you. Thanks to the three of you for joining, and look forward to seeing you all for our next dairy breakfast, which I think will be in December, and we'll hopefully be presenting some of the Dairy Farm Monitor results once they come out. So thanks very much, and I hope everyone has a great day. Okay, thanks.
Thank you, everyone.
Bye.
Bye.